On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. Morning, team. I've had a lot of questions over the last month about the Bitcoin ETFs that were approved in January and what they might mean for crypto generally, for investors, and for the Bitcoin price. Let's talk about that. I do need to warn you, I'm not an expert in crypto by no means, nor do I have any insights into where Bitcoin is going in terms of prices. It's not something I know a lot about, if I'm honest, but I will share my thoughts because Bitcoin, which is the main cryptocurrency, or at least the highest profile one that most of us have heard of, it took a really big step forward last month with the SEC in the US, that's the Securities and Exchange Commission, the SEC finally giving approval for 11 exchange traded funds, or ETFs, to begin trading on the US share market. BlackRock's ETF, that's the BlackRock iShares Bitcoin Trust, that has the ticker IBIT, that one quickly emerged as one of the favorites, and it passed the US $1 billion mark in terms of investor inflows within just 5 days, which is phenomenal, really, isn't it? Very, very popular. And according to Bloomberg, the only ETF through history that has reached that milestone of getting to $1 billion more quickly was the Spider Gold Trust, which many of you will have heard of. Some of you might own it. GLD. That's a very commonly used ETF for people that want to get an exposure to the gold price. So GLD, back in 2004, when that listed, that took 3 days to get to that milestone. And since then, this new Bitcoin one, the iShares one, has come very close to that, getting there within the first 5. That trend could well continue. And I do think that there could be quite a large pool of new money that will flow into these funds over the coming months and years. I don't think that'll come from the diehard crypto crowd because they're already there. They're already invested and they already hold their Bitcoin and other cryptocurrencies as well. But we're going to talk specifically about Bitcoin. They already hold it via the digital wallets, via the cold storage devices, whether it's USB drives or whatever, or accounts at exchanges. Coinbase, Binance, lots of other ones. So the true believers are already well and truly invested. So if there is a new flow of funds coming into these Bitcoin ETFs, the iShares one and others, I don't think it comes from that group. I think it could possibly come from more traditional investors. And the reason why is that group already has a portfolio. They've already got a set of investments. They might be with a wealth management firm like Craig's or some equivalent around the world, JP Morgan Asset Management, or one of the other very high profile, credible entities. Or maybe they've got their investments with a fund manager, but they already have their money somewhere. And most of those people, they like to keep things simple. They like all their wealth in one place with their trusted advisor, and the last thing they want is to have a separate account over there or something over there or something over there. They like it to be a one-stop shop in terms of having all of those different assets and investments sort of in the one place. So that is something that has probably in the past put them off buying crypto or Bitcoin in other forms. This group is also a little bit put off by the need to maintain a digital wallet or the USB device or one of the other ways of sort of holding your crypto. While the diehards think that's fantastic because they see it as being off-grid and a bit more secure, many traditional investors that has an air of vulnerability about it. It doesn't feel quite as secure in the eyes of that group. Whether they're right or wrong is beside the point, but that's how a lot of those people feel. However, an ETF. Now, that is something that the traditional investor is very familiar with, and it will give people a lot more peace of mind because most of us own ETFs already. A lot of investors own them to get exposure to the market if they have a small amount of capital. If you've only got $5,000, $10,000, $100,000, an ETF can get you exposure to all of New Zealand, all of the US, all of the world very quickly and easily. And even investors that have very large portfolios in the millions of dollars, they will still have some ETFs. Even people that use direct investment and own individual stocks because they've got the ability to do that, they probably own some ETFs too. If you want to get exposure to the Mexican stock market or a particular sector or a particular theme, maybe it's the energy sector, maybe it's cyber security, ETFs are a very good solution to sort of fill those gaps so that you don't have to choose a winner in one market or one sector or for one theme. So ETFs are something that is very, very familiar to people. Most of us own one already in some shape or form, whether you're a big investor or a small investor. They're very easy to buy and sell, and they sit nicely alongside the shares, the bonds, and the other assets that we own in a portfolio report. So I think that is something that will appeal much more to the traditional investor compared to the ways that people have been able to invest or speculate or buy crypto or Bitcoin in the past. Now, just to be clear, I personally don't believe that Bitcoin or crypto is an essential ingredient in a portfolio. Crypto's not for everybody. Many of us are more than happy to continue with that traditional approach and leave it out, me included. I'm quite happy owning a range of businesses, both listed and private, and here in New Zealand, across the Tasman, and out there in the big wide world, to have some bonds or some fixed income or some private credit, and to have some alternative assets, whether it's a little bit of gold, whether it's a commodity exposure, or whether it's things like private equity and other funds of that nature. So I am very happy to take that approach. Maybe in the future, I will include a little bit of crypto in the portfolio or some Bitcoin, who knows? But for now, I don't think it's a must own. So let's just make that clear. You're not going to see that. I don't believe you're going to see that as part of the Craig's Investment Partners sort of recommended portfolio constituents anytime soon. It's an option for people. If they want to own it, that's fine, but it's not something you need to have. However, I also believe that there are many investors out there who will, over time, maybe I will get interested over time, we'll wait and see, but there are many investors who will be interested in adding a small amount to their portfolio. And some of those people will genuinely believe in the concept. They will like the idea of Bitcoin and crypto. And then you'll have other wealthy investors who simply like to cover their bases. And they might not know where it's going, if it's going up. They might not completely understand it, but they might be of the view that I've got to be there in a small dose just in case it actually has some success and continues to go up in value. And so I think those investors will see some appeal with this easy way to do that by having a small allocation to one of those ETFs. And it wouldn't take much for it to move the dial. You look at the total global financial assets out there in the world, and all the figures I've seen suggest that we're at the sort of 250 trillion level. Even if a very small fraction of that finds its way into these new ETFs or these new asset classes, then the inflows could still be quite significant. So don't underestimate how successful they could be over time as people sort of learn about them, get a little bit more comfortable with them, and choose to have an exposure. While the ease and simplicity of those ETFs is likely to expand people's interests, I also don't think we should assume that it will necessarily mean prices will go consistently higher. Just because you're going to have funds flowing into those ETFs doesn't guarantee you that prices will or only head in one direction, or that you'll do well from an investment perspective. So there's very much a health warning. And I think anyone who's followed Bitcoin or crypto will know that. It has been somewhat of a roller coaster. Even though if you got on the Bitcoin bandwagon early on, you will have done very, very well. If you invested 10 years ago or whenever it was that it was just starting out, of course you'll be very happy with how things have gone for you. But it has been very much a roller coaster. There have been several major corrections, quite severe ones. Prices fell from a peak to a trough in 2018 by about 83%, so a very big fall. There was a decline of 61% from a peak to a trough in 2020. 53% decline in 2021 and a 77% decline in 2022. So, geez, there have been some huge rallies, but there have also been some massive collapses. So, if you invested at the wrong time, you could well have been very, very burnt. Prices have fallen, sort of 15 odd percent, or they did fall about 15% since the ETFs were approved about a month ago. And there's been a little bit of a recovery since then. So I think we're at about US 43,000 in terms of the Bitcoin price versus the US dollar, which is off the lows, but it's still 35, maybe 40% below the all-time high that we saw back in late 2021, I think it was. And I think Bitcoin got to about 68,000. So we're still a third below that. Whether it retakes that high in the near future, who knows? Time will tell. But it has very much been a roller coaster ride, and it's been very, very, very volatile. So just bear that in mind. And I guess when you think about that and observe those moves, it's quite easy to see why people are still a little bit skeptical. There's also the fact that you can't use Bitcoin in most traditional shops. There are places you can use it, but it's certainly not widespread like other currencies. So if we're going to think of it as a currency, as the name suggests, cryptocurrency, it's only somewhat useful. And if we're going to think of it as a store of wealth, or put it in the same basket as gold or commodities, a little bit different there as well. So it hasn't got any industrial uses like commodities do. And it also doesn't generate any return or any yield like a traditional investment. So all of those things make it really difficult to put any sort of fundamental value on it. And I guess the detractors, or the people who think it's a flash in the pan that won't last, they would argue that the greater fool theory applies, which is really them saying, look, the only reason prices are going to go up is because there's an even bigger fool down the track who might be willing to buy it off you. So they would say it's very much speculation, and why bother? But for others, there is some value. It is a self-custodial, liquid, portable money that can't be debased or confiscated by the state. So the government can't debase it via inflation or other means. They can't confiscate it. You're sort of off the grid. And those sorts of attributes probably aren't something that are of huge importance in many countries. Here in New Zealand, why do we need to worry about that? But in places like Argentina or Russia or Turkey or parts of Africa, don't underestimate the importance of those sorts of attributes. So something like Bitcoin actually could offer some appeal after what those people have experienced and seen in their economies in recent decades, whether it's rampant inflation, whether it's the government confiscating wealth, whether it's people not being able to sort of take their money outside their borders. And there's been a huge amount of wealth destruction in places. So for people that want to hedge some of those risks away, in some of these emerging or developing or frontier markets, maybe Bitcoin has some value just in the fact that it is sort of one step removed. Supporters also like the fact that it has a fixed supply. So when you look ahead 2 years, 5 years, 10 years, we have no idea how many US dollars, how many New Zealand dollars there will be in the world. The reserve banks and the central banks and the governments control the money supply. And if they want to print more money or create more money and erode its value, they can do that. And that is something that worries people. Whereas when it comes to Bitcoin, there is a fixed supply, and people can look ahead and they know how many Bitcoins there will be. So that can give people confidence too. So there are definitely pros and cons. I think the approval of the Bitcoin ETFs is a really important milestone. I do expect them to succeed, well, at least in terms of funds flow. In terms of prices, who knows? Make your own decisions about that. So I think for people looking to dip their toes into the world of crypto investing, these ETFs will hold much more appeal than previous options. However, my advice would be to remember those usual investment guidelines and rules. And if you do choose to get involved, just keep any allocations small, don't go overboard, and be mindful of some of those risks and some of that historic volatility that we've seen. It's going to be a really interesting space to watch, and I'm looking forward to monitoring how these options and ETFs and this whole new world of a new asset class potentially does develop.